In this video, I've got something really special lined up for you. We're going to look at the structural levels on Bitcoin, ADA, and Doge, but that's not the special thing. The special thing is, I'd like to take all the pain and anxiety away for trading and investing. Specifically, we're going to talk about a 2% return and exactly how much that can make you. And then I'm going to get really practical and I'm going to show you how you can do it. Not just now, but for literally your entire life. Let's run the numbers. Welcome back, everyone, to the Daily Show. I am grateful and appreciative you've joined us. Now, let's talk a little bit about 100x return. What exactly is 100x? If you're new, a very warm welcome, and welcome back, CTKS family. So basically, 100x return is not too hard to understand. It's literally you just multiply whatever you put into the market by 100. So for example, if you had $500 and you got 100x return, you add 2 zeros to the end of your investment, and that would be $50,000. 500 is your initial investment plus 2 zeros at the end. You got it. That's 100x return. Now the problem is that most people want to do 100x return in one hit. That is incredibly risky. In this video, I'm going to show you some keys, some tricks, some tips to get up to that 100x and even exceed it. If this sounds good to you, please smash that like button, and if you're not subscribed, hey, please subscribe. I'm going to be bringing you a lot of tricks that you can put immediately into practice. It's going to be worth a fortune to you. No theory, practice, practice, practice. Okay, let's get into it. Looking into the major market indexes on a daily basis, we can see the S&P 500 has been coming up and up and up. And what is that blue line right there? That is Bitcoin. Bitcoin is a very risk-sensitive asset class. You can look at Bitcoin to determine where the financial markets, the main markets, could be going. If you see Bitcoin coming up like this, this is called risk-on behavior. If you see Bitcoin coming down, that's risk-off. Because Bitcoin trades 24/7 by 365, it gives us the best indicator of risk available. And it works across financial markets. If you thought Bitcoin was just about crypto, of course, it is about crypto, but it's so much more. Moving to the 8-hour basis, we can see that Bitcoin and the major market indices are moving in lockstep, literally right around the world, from the ASX in Australia to the Hang Seng in China to the DAX in Germany to the Nikkei in Japan and of course the major US indices. Coming down to the 4-hour basis, you can see that Bitcoin took off before the major market indices did, and this is Bitcoin's claim to fame. It sniffs out risk-on or risk-off behavior before it hits the main markets. Many traders love the 15-minute time frame because it gives some fairly good signal. We can see that across the past couple of days, we've seen Bitcoin come down in terms of the major market indexes and then start to come up. We've also seen that Bitcoin is now rallying. This is pointing towards risk-on behavior across financial markets. Always bear in mind, price is always moving in a wave. It's always coming up and down, up and down. Therefore, seeking to buy the bottom or sell the top is not realistically the issue. Just participate in the mainstream of the trend. It's very important to understand the structural levels on Bitcoin. This price action may look really random, but when you compare structure with this price action, you'll just find the price waves are just price moving between structural support and structural resistance levels. Now, structural resistance shouldn't be drawn from recent indicative price, and recent indicative price is just typically the time frame that you look at, up close and personal. It may be a couple of days, it may be a couple of weeks or a couple of months. In fact, to do it correctly, you use level 1 and level 2 standards. and mark up all of price history. In this way, you see where smart money is buying and selling. Now I'm going to pop on an indicator. You can get this indicator from CTKSmethod.org. Let's have a look at it. Now, if you're new to CTKS method analysis, I'll just draw this across. This analysis tells us where smart money is buying and smart money is selling, and we can see through this level, just a little bit north of 104,500, Bitcoin was being sold. But we've seen something interesting. This structural support, which got tested across the weekend, is getting less and less tested. We're getting more and more follow through. Bitcoin is currently 105,720. We've seen that we've got above this level of structural once resistance, now potentially turning into support. That level as is that 104,744 level that was the subject of a video last week. Now, what does this actually mean? It means that we know ahead of time where smart money will sell and smart money will buy. We also know how layered smart money's interest is in a specific zone of price. For example, between 101 up to 103, there were a lot of smart money buy levels. This meant that we were likely to find buyers in this zone, which we have done so. Now, looking at the structure above that 104,744 level, we can see it extends up to literally 109. If the buyers get really excited and therefore liquidate all the shorts on the way up, we could literally have a structural overshoot on that 109 level. Just remember, price is always moving in a wave. Just because it comes up like this, when it comes down, structural support is playing in always. Just keep an eye on your structural support. And keeping your eye on Bitcoin is majorly important. If we get follow through, the 109 will open up, potentially within the next 24 hours. Why is that? Because we're sitting on the brink of a positive CTKS gap. There's minor resistance above. So this is very good. And if we get a retracement, and anything below that 103,300 mark will be met with buying demand. We're in a fairly safe spot. Because price moves in wave, the best investment you'll ever make is in your own knowledge of understanding structure. When you understand structure, you know where smart money will come in and sell down, and you'll also know where the safety nets are. The more safety nets, the more probability that price will reflect upwards. And also remember that trading investing is the ultimate recession-proof skill, especially trading. Trading your in and out for small percentages. Now, a lot of people who unfortunately don't know mathematics will say, no, I don't want a small percentage. I want a billion, trillion. I want 1,000x. I want the biggest percentages I've ever seen. Actually, what you'll find is when you do small percentages regularly, that's the way to minimize your risk, to maximize your profitability. And more importantly, you'll get many more X's than all of those people searching out the big X's, the 100 X's. Now, here's that. It's a property of mathematics. When looking at X's, and I don't mean your former partner, 100x is literally 10,000% return. Now this is 229x. That's a lot of X's. Now, how did you get this return? You simply roll 1.5% return per day for a year. Doesn't sound too difficult, does it? 1.5%, especially in the crypto market. But what if you got really greedy and did 2%? Ay caramba. That's gone from 100x to 1,383x. This is why inside our community we talk about small percentages are the key to success. They minimize risk, they also maximize opportunity. And in between those levels of structure, you can find these kind of returns all over the place. That's why you need to know where those lines are. Forex traders know the power of 2% incredibly well. Now, when you look at a price chart, Bitcoin tends to be like the grandpa of the crypto market. Even though it just moves wildly, you need the alts to give you better percentage returns. You use Bitcoin to give you directional momentum across the main markets, the risk on or risk off sentiment, and so many other things. And of course, no problem investing or trading in Bitcoin if you wish. It's all very much a personal thing. But what we need to do now is to understand if you were looking, for example, at Doge from a structural perspective. Now, it requires 2 levels of standard certification to understand how to draw out this structure. These are not random lines, they're lines drawn from science. A very rigorous methodology. Now, why do we use them? What's the point of this? For example, if you saw Doge up here and you were saying, I think I can go for a kind of a 2% return. So you could layer in these levels and a retracement would take you back literally 5.5%. And that is done pretty quickly. So this is something that you just want to bear in mind. We were talking about 2%, but what is the gap between this structural level and this structural level? It's nearly 1.5%. What about from this structural level up to this structural level? That's nearly 3.9%. And from this structural level up to this one, it's literally 5.5%. And you could be doing this day in, day out, day in, day out. No matter if price is coming down or price is going up, it makes no difference to our methodology. This is why structure is important and the reason that we look towards the right. This is where smart money is buying and selling next. So if we don't maintain this structure, this is the next support level, this is the next support level above. If we get above this level, this is the next resistance level above. And if we move the chart, we'll find the resistance levels above that. You could of course put your money into the banks and say, okay, I'm looking for 4% over 365 days. Of course, you could do that. Or you may be able to get 5%. Wow, how cool would that be? Or you could get it in less than a day. But you must know what you're doing. Not all structure is created the same. Here we're looking at ADA Cardano on a 1-hour basis. We can see that the price has been wobbling throughout the weekend and we've seen that bit of a kick up. Now, we need to look at structure. How do we do that? By throwing on the structural indicator or just marking up your charts with level 1 and level 2 standard certification. The harsh lesson inside financial markets, if you don't know where the structure is going, you're going to lose money. Unfortunately, this is just the way. So we can see ADA on an hourly basis is getting above this structural support around that 74.65 and around the 73.98 mark. Right down here around that 72.13 is an absolute barrage of strong structural support. This is what you want to look for, and you can see what happened here is that we had this massive sell down. We didn't have much in the way of structural support through here, but we got it in these 2 levels. And then there were a mass of buyers saying, I'm going to defend the 72.10 level, and they did so, which pushed it up. Now, if ADA takes off, you can see that there's a fairly positive gap up until around the 80-cent mark. That is literally a 7% gap from down here at structural support. Now, we saw it just got tapped. We could move this percentage up, but you can see it's above 2% already. Now, what happens if ADA retraces? Even if it came back to the 72.10 area, could we still make money? Absolutely, and that's the whole purpose of the CTKS method. It's all about using these price waves and price structure to pull out small percentages that add to incredible returns over time. And you can see from that around that 72.10 area up to the first level of major structural resistance, we've got a 2.72 percentage point in there. A lot of people, when they trade, they simply have to FOMO into price because they think they're going to miss out on a move. You can do a multi-layered strategy. You can just pop in at price and wait for a positive CTKS gap if you have that confirmation, or you can wait at lower levels to scalp these kind of returns. And inside the crypto market, there's no pattern day trading rules. That means that you can get in and get out of anything as many times as you want. Just awesome. If you would like more structural levels from the cheat sheet charts, and these are all marked up, so every indicator is available to just pop into TradingView and you have the levels. This saves you an enormous amount of time. You don't have to apply level 1 and level 2 standard certification. You just pop on the indicator. If you like that, you can pick up these indicators from ctksmethod.org. In future videos, please let me know what 2 out of these lists here you would like to see the structural levels on. Just keep in mind, the power of 2% is absolute. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.